Maverick traders, welcome out to your market roundup. It's November 3rd. Corey here with you. We're going to take you through meaningful news. We're always going to talk about which sectors are heating up and cooling off. We're going to highlight our very best bullish, neutral, or bearish ideas, and the markets have had a decided shift, and we'll talk about that shift in the market.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So we come in this week and kind of a quiet market environment. There was quite a bit of news, some buyouts, some spin-offs, some merger acquisitions, that sort of thing. But really, the markets were quiet. Dow down 0.5%, S&P flat, NASDAQ up 0.5%, Russell flat, oil flat, gold flat. There really wasn't a lot of volatility. There certainly wasn't anything of note in major markets that way. But the themes that have been in place, somewhat still in place. The AI trade still alive and well. Amazon jumped over 38 billion in market cap on a cloud deal with OpenAI. All you need is for some deal with OpenAI, the creator of ChatGPT, and your stock price jumps. On the flip side of that, I would call it old companies, older brands like Kimberly-Clark. They announced a buyout. They're going to buy out the Tylenol maker, and their stock fell on the news. So can old companies kind of reemerge right now? It is decidedly bullish for the tech and AI trade, but everything else is being left in the dust. And you're seeing that in the advanced decline line. 60% of stocks down today, and the 50-period moving average, we've now shifted into a bearish market environment. 6 out of 10 stocks are now in a downward trend and below their 50-period moving average. That's a little shocking when you look at the charts. So as we look at the S&P, you'd say, well, everything looks fine and dandy. I mean, this looks like a bull market, right? We're moving from lower left to upper right. We're still trending in the right direction. Everything looks in place. Everything looks intact. What's the problem? Well, the problem is that when you dig below the surface, what we call market breadth, this is not a widespread rally. This is the S&P 500 is going up because the Amazons, the Apples, the Nvidias of the world are pushing higher. So yes, there's a select few, which happen to be the biggest market cap stocks in the world. Those are doing well, but the other industries, the other sectors have somewhat been left behind. Now look at the price action. Notice how we keep gapping up and then selling off. And then we, gap down and we sell off further. We gap up, we sell off. We gap up again today and we sell off. This is called a distribution pattern. Essentially, this was the signal of it. You can see the big distribution here, but in essence, the markets are using liquidity to unload shares. That's what's being seen. The market will gap up on some news, and then the majority of the action is on the sell side. That's why the market's pushing lower. The majority of the action in the markets right now is actually pressuring the markets to the downside. It hasn't given up ground because you've got those select names that are holding out. But this is the first time in a long time where we really need to be more skeptical, where we have to say, okay, the uptrend is intact in the S&P, but we can see below the surface that all is not well. And so this would be like going to a doctor's appointment. Yeah, you feel okay, but the readings are just not coming in very healthy. We need to make some changes. So, it's not a bear market environment, but that's just where we're at. Look at the Qs, same thing. Look at all the distribution that's happening after some gaps higher and you sell off. I would anticipate a bit of a correction, a bit of back and fill is the next trade in the broader markets. Now, if we look at the heat map, a whole lot of red with the most important names still holding up. Amazon up 4, Nvidia up 2, Apple slightly lower, Microsoft flat, but Google still higher. Tesla certainly sharply higher. So again, the select names, pretty good performance, but a lot of red in industrials. Quite a bit of red over here in the communication services. Quite a bit of red in the financials and the healthcare and such. So it is just a shifting market environment. Now, if we look at potential trades, I specifically highlighted fewer bulls than bears. I wanted to emphasize that point that on my scans, what's showing up as far as buys and sells or strength and weakness. Now, just because I have something in these lists doesn't mean that it's ready for action right here, right now. But the point I want to make is that these are things that are popping up, and for the first time in a while, I now have fewer possible bulls and a lot more possible bears to choose from. That's a big shift from what it had been for weeks, where you had a lot of bulls and not very many things on the bearish side. That has shifted, and that's worth note. So let's take a look at a couple of charts and possible trades here. I'm going to start with Las Vegas Sands on the upside. So this would be an example of bad news and good price action, and we'd always want to trust the price action more than the news. News can be fickle that way. So Las Vegas Sands breaking out of a multi-month consolidation looks pretty solid on the upside. How about Snowflake? Same type of dynamic here where you really have good price action. You have a little mini sort of cup and handle that formed here in Snowflake. You can see the consolidation period and how that created a little bit of a dip effect, right? So you have the dip here that creates that sort of cup look, and then the more shallow, small handle, and away we break out to the upside. So very strong price action in Snowflake, more upside anticipated. But the bears are interesting because there's just more of them. So Chewy as an example, CHWY, you can see the consolidation here that we're breaking out of. We've been in this descending triangle, this series of lower highs and equal lows, and away we go to the downside. We are now breaking this level. We even kind of checked back up to it, which is the old kiss goodbye. Break support, kiss it goodbye, and away we go to the downside. And then last but not least, another bearish candidate, Nike. You look at Nike, great brand, very, very bad price action though, and this has been the case for some time for Nike. If you were to back up, there was a little bit of a bottom back in here that it rallied up out of, and it's since subsequently reversed. So on a big picture basis, we're back to some key levels and breaking those levels of support on the longer term chart. Just not good for Nike at all. So NKE looks like we should continue to test lower prices in the weeks ahead. Now, market breadth has turned negative. We're starting to see these distribution days stacking up. I'm certainly not as bullish as we had been for months. Payrolls come out on Friday. Earnings season still in effect. We've got Airbnb, AMD, Constellation Energy, Qualcomm, Uber, and plenty others. I think ConocoPhillips and a few others that maybe I didn't list here. So keep after it. Continue to use good risk management. Look for relative strength, relative weakness. Trade those momentum turns. Right now, I think that's more to the downside, and there should be a little more give back in the markets in the weeks ahead. Hope you've enjoyed it. Have a great week. We'll see you next time.